So the long-awaited Q1 earnings by Tesla. And once we looked into the earnings, well, they didn't look that good anymore, okay? This is at least what the market thinks, okay? Wall Street thinks that the Tesla earnings weren't so great, all right? If you're looking into the stock as of this recording, the stock after the earnings night, basically, lost about 3.43 or 3.48% as of this recording. So in the whole week, we are basically back where we went from, okay, about 700. And I can see, honestly, a Tesla stock now for a very long period of time at 700 levels, maybe 780. Now, there's a technical situation here at Tesla shares that need to be seen very cautiously, because usually you can see the following. As soon as Tesla shares should fall under 692, which is the 50 moving average, then we should expect further downturn to the shares, okay? This is something that is very, very fundamental in the technical analysis. Very much algorithms are working in that perspective. And you can see here, it happened also at about end of February, okay? End of February, we crossed the 50 moving average, which is here, the purple line. And then we went even as low as $575, okay? And then we recovered, and then we had the huge, gain into the share price once we crossed it back. So this is the things that we just recognize after the earnings. But the question is, why is that? Okay, why the earnings were not so great for those investors? Okay, because why? Tesla sold so many cars like never before, all right? Over 180,000 vehicles, and even S and X production was not included because they are currently just updated. So this car and the S model is currently updated. So even the huge margins that they make on this type of cars are not included. So where is the problem? Well, the problem is in the detail, in my personal opinion, okay? I think that Wall Street now sees, okay, they read those headlines that are totally wrong, okay? I will give you an example. So there was the headline by, I think, a Wall Street Journal guy that said Tesla made more money selling 272 million worth of Bitcoin and making over $1 million profit with that than on the cars itself. Great headline. Great headline, okay? But for all of us that look a little bit behind the numbers, know that this is factually not true. This is false. This is fake news, guys, okay? Fake news.
Unfortunately, we tend to record stories now, so we have it for your enjoyment if you'd like it. But we record when we deal with reporters. It's called fake news.
So this is exactly why they selling more articles, and you are going to see, oh, I need to see that. I need to read this article and pay then $5 for Wall Street Journal per month. This is how it works, okay? However, Gary Black, the guy, the Tesla guy from Twitter, who is very, very active into the Tesla industry, wrote the following, okay? In his tweet, he said, Tesla reported 1Q quarter one autocross profits of 2.385 billions, okay? Which including 518 registration credits, so 1.867 billion X-Reg credits, okay? So basically they made over 2 billion profit. If you deduct this CO2 credits, then you are at 1.867 billion gross profit. Now, obviously, there are some expenses as well, okay? So if you compare that to the 101 profit for Bitcoin sales, you see, wow, okay, that's totally something different. But there's obviously the deduction of the expenses for the gross profit, okay? So Charlie points out to the 533 million of PBT, but fails to back out 170 million in losses from energy and service segments. So auto profit is bigger, $103 million. Now comes the main part actually, but that would assume 100% of R&D, CGA, and international expense goes to auto, which we know it's false. Even attributing 87% of Tesla's 1.7 billion operating expenses to auto in line with Tesla's revenue mix, Tesla made over $400 million in profits, okay, on cars. Therefore, it's 4 times as big as Bitcoin. So let's put this to the side. So what is there that people don't like, what investors don't like? I believe there's a couple of things, okay? The Tesla stock goes down because first we had an absolutely great run over the last couple of months. So this further anticipation of higher and bigger and better and faster, this greed that the investors have, is slowly, seeing, oh no, they cannot grow so fast. Oh, at the outlook, at the presentation, they said only they will grow 50% per year and maybe a little bit more in this year with deliveries of cars. So this means that this year we will just make 750 sales of Teslas versus, the 800 or 1 million cars that some analysts had in their mind, okay? We see that people are maybe afraid that, there was a huge beat in the EPS number, the earnings per share number with 93 cents. But if you deduct the Bitcoin profit, then you are deducting about $0.15 cents. So you are not at 93 cents, but you are somewhere at 78 cents versus the 78 expected or $80 expected. It's basically there where it's expectation delay. So it's, I think, a mix of this all things together, a big number on the registration credits, biggest ever, so the people get in mind, wow, they are not making so much profit by their main operations. They need the regulatory credits, they need the Bitcoin sales, and so on and so forth. I think there's a lot of noise that we know. And the only problem that I currently see is the market is in such a momentum and in such a blur also by so many new retail investors that they actually don't see that there's also an post-health crisis world where things don't go that fast anymore, okay? Why Tesla is exempt by that pretty much because they have much more demand. This might be a chance for you to go into Tesla shares cheaper than $700, okay? I expect the Tesla shares go definitely over 800 this year and maybe cross 1,000 this year. We shall see, okay? I'm pretty accurate with my Tesla predictions. When the stock was at $500 pre-split and I said, they will be at $750, people thought I'm crazy, and the stock ended up at around 780. So huge, so close only to the real deal, okay? So I had many expectations and price targets over this couple of years, and I was always pretty accurate. So with this said, you can see that it's a mix of market momentum and people just want more and more and more. And also a huge number of retail investors are steering where the big hedge funds putting their money and so on. So I think that with such a record number of money also on the sidelines still, I think that this is an opportunity to grow over the next couple of years. And this should be your only focus, okay? What this company can do over the next 5 to 10 years, okay? This is the focus and should be the only focus for you, okay? And then you can look into the short-term options. Yeah, there's an event in June or July of the AI of Tesla, but still, usually the stock drops after those events. So don't anticipate too much. And what can happen to such high momentum stocks like Tesla, we have seen a very good example at Netflix, in my personal opinion. Okay, you have seen this unbelievable growth in stock price and subscriber numbers, and Netflix was even so transparent and said, guys, this is not sustainable. And then once they came out with their numbers, the stock went down 5%. Okay, though the overall long-term perspective is great for Netflix, right? With so many new content coming up, I think 5+ Oscars won at the Academy Awards 2021. So you see the long-term perspective of all of those companies are pretty great, including Tesla, obviously. So what you do after that, it's your personal opinion, but I think it's still a buy. I think the fundamental story of Tesla is still intact. Absolutely fantastic growth. And the stock is just doing their normal market reaction. This is what you have on Wall Street every now and then. And I believe Tesla has one of the greatest potentials on the stock market worldwide.